if we can jump to Barnaby, it's a great segue into the capital markets side. I think that the most consistent question that I've been asked since I've been in Thailand on the investment side is what's happening to land prices.
Yes, me too. I mean, it's a mixed picture. When we think about land prices, we have to first think about development, because people buy land to develop something on it, whether it be a condominium project or an office hotel project, whatever. So we have to look at how the major developers, for example, are spending their money. If you look at the CBD downtown, actually spend has dropped dramatically. There's been pretty quiet, and when you look at the allocation of budget, sometimes it can be almost down to zero in the last couple of years into how much will be spent on the CBD. That's ticking up a little bit now, but it's still very low. So what that means is that there's less buyer demand at present, and the pricing that sellers have in the CBD downtown can't be reached at the moment. Developers are looking more midtown, suburban. They will look at in-soy, low-rise, townhouse projects, anything around stations, large landed house developments. So in those locations, actually land prices, demand and supply has matched much better. Land prices have held up better, and in the good pockets, actually, land prices have even gone up. But to really understand the land price story, you have to think about the pressure that's on the developers. And they are in a slightly difficult moment because you've got inflation, so rise in labour cost, rise in material cost. You've also got the banks, which for developers, for greenfield projects, they're a little bit cautious. The interest rates are ticking up in Thailand, just 1/4 point the other day to 1.5%, pushing through on the mortgage lending rate. So again, that's an additional cost for the developer to absorb. And then in the end, whatever they build, like if it's an office, it needs to be leased, or if it's a condominium project, the condos need to be sold. So that end consumer demand is a bit further out now. Projects are taking longer to lease. So all that feeds into the appraisals. So generally, that's kind of starting to recover, but I think the pre-COVID huge increases in land prices is going to be a little bit more moderated going forward, and at the moment that's more outside the CBD, and it will just start to come back into the CBD. It's especially in the unique locations. If you've got good land in Lumpini, Langsuan on the river, that's always going to be okay. Yeah.
Well, I think that probably leads us to another thing that we touched on last year, which was if landowners can't get the price that they want, will they lease? How successful will that be? What are the considerations? And are there companies willing to lease in this difficult market? What's happened?
Well, leasehold has been an interesting topic actually over the last 2 years, and I guess it depends through which eyes you look at it. Because if you are an owner, a landowner, you own a building on a 30-year lease, you will have a fixed rent schedule. Maybe that rent goes up a percentage every 3 years. And that's actually very stable income. The leaseholder, no matter what the performance of the asset, if the office is struggling or the hotel had to shut for 3 months or what have you, they still have to keep paying that rent to the landlord. So the landlords have been fine during the last couple of years. On these leasehold assets. And and the other thing to mention on these leasehold assets is the actual leasehold, of course, has value as well. So you very rarely get a defaulted leasehold payment. From the leaseholder's point of view, the picture hasn't been quite so comfortable, because if the asset has had struggles in the last couple of years, they have to keep up the payments. Sure, the banks have supported in terms of repayment holidays and things like that, but they still have to keep up the repayments. And then once they come out of COVID and the building goes back to normal functioning, that time in the last 2 or 3 years, they may have built up debt and lost time on the lease. So not so great. But if you look at it from one more perspective, which is a development side. So if you want some land in downtown and you want to, you're thinking, well, should I buy it or should I lease it, and how has that changed? Well, you know, leasehold still has some good fundamentals that, you know, are hard to ignore. You know, when you look at the total cost of investment into the actual land that leasehold requires compared to freehold, for a 30-year lease, you're talking like 30 to 35% of the cost, so 3 times less. So actually, that lower barrier does suit some people. You know, I'm thinking like particularly retailers, maybe small community.
Well, they're not
mills.
maximising the development potential of the land.
Right, exactly, and they just need a you know, a settled asset for the long term, and they can generate revenue from it. But actually, the other thing that does suit leaseholders sometimes is if you want to develop an office project or a mixed-use project, an income-producing project, if you have a clear exit plan, like, for example, you have an exit plan to put it in a REIT. REITs can accommodate leasehold assets very easily because the long lease profile within the REITs can be varied. You can mix it with freeholds. So you can actually develop leasehold assets, and then when the asset is fully operational and, you know, settled down, you can then switch it to a REIT. And that's still, I think, going forward, a very valid strategy.
Well, I think that probably brings us on to my last question, which is perhaps highlight some of the transactions that have happened in 2022, and I know some of them were leasehold, and maybe touch on some of the joint ventures and what you think will happen in 2023?
Yeah, I mean, there's been actually a good amount of activity last year, some big deals. You know, if we're talking Bangkok CBD, really the headline one was BDMS, taking a 13 rai plot in Lang Suan, and that, you know, the cost of that was 23.5 billion baht, so it's a significant deal, you know, but it looks like a fantastic wellness project, you know, great for the location, great for the neighbours in the area. Another huge deal, actually in Adam's sector, it was WHA's sale to BYD. That was 600 rai. And major transaction, and that automotive, you know, future EV industry coming to Thailand, using it as a distribution hub for Southeast Asia. You know, it's great for Thailand, and it's a really significant real estate deal. They're not the only ones. You know, there's more typical CBD transactions. I mean, we were involved in one just a couple of months ago, which was leasehold. We sold a site, 2 rai site on Soi 29, and that was a Japanese owner to a set-listed Thai developer, SC Asset, and they've got a 300-plus key hotel planned to build, which looks like it's going to be fantastic in a great location opposite M Quartier. It's not the only hotel development deal either. You know, before that there was one on North Saton Road. Thai Nitsumishu and a Japanese consortium buying a land plot to build a hotel, Grand Nikko, which is going to be 400 keys plus. So, like, these are good signs, and it shows that there's confidence in the industry. So, yeah, I think that there's deals happening, but I guess, and this is touching what Eddie said, we didn't quite see the volume of distressed asset sales that we thought we might see in COVID. Because of bank support and other reasons like that. Most owners have hung on to their income-producing assets. But I think what we see going forward is adaptation, is reassessment. I think people are going to look at their portfolios. They can foresee the future now, that things have sort of settled down, they can see the way the economy is going. And they will reappraise their portfolios, look at how much exposure they have in each real estate sector, and maybe change it, maybe sell part to generate some of the, you know, funds that were lost during the 2 or 3 COVID years. So we do see some more income producing assets come in the next 1 to 2 years, portfolio rationalisation. Yeah, I think that is coming to some extent. Yeah, and then finally joint ventures you asked about. Yeah, I mean, I'm glad you asked that, because it's a really important part of the Thai real estate market, because, you know, direct real estate investment is difficult, But the way that foreign investors can do that is through taking a 49% or an equity joint venture stake in developments and buildings with a Thai developer. And actually that structure works quite well, and it's a tried and tested method. You know, we just in 2022, many companies were still doing it. You know, Origin, Britannia, Senna, AssetWise, who had Takara Lieben, was actually their partnership with them was set up just after COVID, and then they've got another partnership with Tokyo Tatamono for an Egamai project. So you can see that it still it suits the international market. And we see that too at CBRE. You know, we've seen an uptick since the borders opened in inquiries for this sorts of things. So, you know, I think there's international investor appetite, and then from a Thai company perspective, it suits them too, because you know, the cost of debt is going up. It's useful to have an equity partner, sometimes even bring in a bit of expertise into the project, maybe help in some other aspect. So actually the Thai developers like it too. So yeah, overall I think the whole the joint venture structure and way is going to continue into the future.
And an interesting JV, not so much at a development level, but actually at an investment level with Asset World.
Right, and GIC from Singapore, you know, that's a sovereign wealth fund, and actually quite a significant deal. You know, again in the hospitality sector, it's showing confidence that it's going to come back, and that partnership, I think, only maybe signed a couple of months ago, and it's very much focused on buying, you know, hotel assets over the next coming years in the Thai market.
Yeah, looking to do some asset management on those. We've seen renovations, and I think it's just an insight into where we're going into 2023. There's whether you're an operator, a developer, or an investor,
yeah,
having to adapt as the market continues to change.
Yeah, that's right.